Good morning, good evening, wherever you are joining me at this hour. Welcome to 300 edition of Investdata Trading Academy live with Ambrose. Yes, as usual, you can see this period, the market is so very dicey. And I will tell you again that this morning, as we look at the global scene, market has also opened what on a mixed direction. We are seeing that no US market is already missed at this hour, while that of Asia has just moved to southward little, on losing just marginally, and Europe is not left behind, also looking down also in the southward direction, and that of Africa is purely missed. In Nigeria, we are seeing a little a uptrend, just marginal. We saw that when the market opened this morning, it was in red. It goes up and down as we speak now. But the good news is that the market is looking a bit dicey. And I tell you that we are not surprised seeing market this month after seeing the kind of move we saw on Friday and yesterday. We expect that profit taking activity in some stocks will be there, and also as we expect to see more high profile earnings that will also impact positively on the market and also individual stock depending on the number or the strength or the mood of the company result we expect. But I believe that the investors around the world and even back here are becoming more cautious, watching the trend as happening in global scene and also down here in Nigeria. But for me, there's no cause for alarm in the market as far that our market equity space. I tell you, we have opportunity to move our portfolio from one sector to the other, and at the same time, we have opportunity also to cash out our profit. And that's why I said, as a trader investor, whatever you are trading, your investment objective is very important, and also making sure that your trading plans go with the reality on ground in any domain you are trading. Don't invest in assumption. Know what is happening, what is the policy direction, know what is happening in different sectors, what are the policy, either monetary or fiscal, that's going to affect the economy, which sector will be hit hard, which sector will be getting from this policy. Is good that every investor should understand. That's why I said fundamental of any economy is very important. Whatever you are trading, no matter the kind of investment window you are in, always look at where is the economy going, what will make your investment to flourish, and what will make to look up. These are the things we need to have at the back of our mind when we are trading as a investor or traders in the market. You need to have this at the back of your mind. But that will be the support that will help you to stand there firm. Because if you are investing and you are guessing, you have not started. Like those in this platform and all of our fora, I'll tell you that the best way to arm yourself or to kind of prepare yourself is through knowledge. Once you're able to arm yourself knowledge in the market, I will tell you, even when others are panicking, you know what you are doing, you are investing with confidence. That confidence will also reflect in your results. But when you are the type that you are following bandwagon, any particular movement, whether you are jumping out, the moment you are jumping out, the next stock start going up, or you are not buying at the right time, that's why you must know where the market is going and the opportunity the market is also creating for you to take advantage of what is happening in the market. These are the things that we need to have at the back of our mind, that we don't not just to be running a skater from left to north. Like I've said earlier, that the market across the globe, including Nigeria, they are all mixed market. We're not saying that all the market in the Western world are in green now. No, we're seeing some indices are in much slight green, while others are in some red. These are the things I say is in this market, and also keep our eyes to see. But despite the mixed market, there are some sector where investors are cashing out profit. There are some individual stocks that are performing the market. There are some defensive positions people are taking. You must know why you are in the market and how to know that your portfolio is kind of all I put is there to prove that you are put your portfolio in a space that no matter what happens, either defensive or like arguing for that no matter what happens in the economy or the sector you have already prepared yourself. You are pushing your portfolio to adjust to any weather or any direction or any cycle of the economy. It's very important that we have it. If you look at what is happening in Asia, yes, we saw proactive government yesterday. At the end of the we saw the China government has come out to say, oh, because the economy is recovering is very slow. We have seen that it's also creating negative impact because of also employment, because also activities, consumption, spending has also been affected. Yes, we want to bring that stimulus. That stimulus also, even with that stimulus announced that they are prepared to but that because of the Fed meeting, that's also that have started today. Every is 2 days. As Indonesia and Nigeria, we expect to see communicate today at the end of the day to know whether they are, they are holding, they are pausing, or they are adjusting up, become hawkish, or they are bringing that, they are losing it. All these are days of the world. For Fed today, the meeting has started off today. It also end tomorrow, Wednesday. While that of Europe will start on Wednesday and end on Thursday, and the Japan will start on Thursday and end up on Friday. You can see these are the things that are going to shape the market. But because of this, expected outcome of Fed meeting, I would say even with the China, government promise to kind of bring more policy to support economic growth, I will tell you that the market is still very, very not in the direction as expected. It's still a misdirection as we speak now, just to reflect that investors in that economy are still looking at what will drive the market. It's very, very important that these are things every investor in any climate want to look at. And also, if you look at also, as they are also, we expect that results also come. And I tell you this, any season, they expect that they will expect inflows of numbers both in US, both in Europe, both in the initial market, even Africa and here in Nigeria. This is the earning season. All eyes on this number, and as big names reach their results, it has the world also impacting the market. That is what we're expecting, and this expectation across the globe. Yes, all eyes on what on the policy outcome, the policy meeting outcome of this different zone. But I'll tell you, all earnings is what people are betting on now. Earnings is what they're looking at. They know where they're likely to, the policy to come from this matured economy. Already, I've told you yesterday that the expectation that Fed can do 25% 25% basic point hike, and which will be the last for the cycle. And also, that's the also expected that in Europe, that the European Central Bank also will do the same 25. Why in Japan? Japan have been a negative interest, which also they want to maintain, because that has helped them to stay even when every other economy were hacking rate. Japan and China were decided to be putting their rates down. You can see that depending on what is happening in your domain, you can see it in what happened in China. That's why that the economy is also going on a recovery on the slow growth. Also in Japan, we can see that they have been stable compared to others that have been hiking rates. Let's see what will come from Fed tomorrow and that of ECB on Thursday and on Friday for that of Japan. But as I tell you, because the expectation for Fed have been also kind of around as well, people are very kind of looking the world for what will the strength of earnings, whose side is the earning going to push the market. Yes, they've seen that continual tightening is going to affect some companies, especially as China or Asia market has been that because of the activities in China, most of the companies that will be affected by what the low economic recovery and all stuff. Also, that's why all eyes are on that number. Also, in US are not left behind. We saw what happened during during this period of hike that many banks were going under. Somewhere government are bailing out some. You see all those activities. Want to see how more number that will come. What's going to show what is going to be as a pointer that these economists are doing. These are the things that the market is hoping on, and market also trusting to see, and that I believe that also half a way they're going to shape investors' sentiment. And also don't forget that if you look at what has happened in the commodity market, especially in the the crude oil, you can see that the oil has successfully sustained its uptrend for almost straight 3 months. As I speak now, oil is trading almost 3 months high around the 82.27 per dollar as we speak now. Even when there's a tightening move here and there, but also it's rate hike and all those stuff. But because of the proposed or kind of stimulus plan by China, you can see that it also changed perception for oil, knowing that China is one of the largest consumer or buyer of oil of crude oil. But I can see these are the things that is playing out in that market. But I'll still tell you that what is happening in Ukraine and Russia, it's not helping matter, and that also is not so tightening, causing the kind of position we are seeing in the commodity market. You can see that the dollar just also beat out again recently. And when that dollar is high, it has a way of also affecting commodity. But now that a dollar is also coming back powerfully again, what's going to be for the commodity market, what is happening, you're going to be in commodity market. These are the things that investors also look at, even as all eyes are what or more corporate earnings to flow in this domain. But they are still looking at how are these going to play out in their domain. It's very, very important. And that's why you also, wherever you are, whether you are in Nigeria here, you need to understand what is the fundamental of the economy. Like today, we expect to see the outcome of the MPC meeting. Latest before 2 today, we'll be hearing, will telling us what they've agreed or what they've decided to vote for. Is it they're voting for 50 basic points? Are they voting for 55 basic points up, or they are leaving rate unchanged to see every scenario that's happening to play out, so that they will know in direction where the economy is going? Because I tell you, everything Nigeria is hit up now because of reform around the corner, and also pressure on on inflation, on prices, and also government planning palliative. What kind of palliative will palliative of is it for us to go and buy food in the market with 8,000 naira? All these things we're looking at to see what's going to play out. Are they going to make transport cheap so that farmers can move their goods to the market at a good price so that they can start addressing food prices? Don't forget that in a basket of inflation, food and energy contribute the most in that in that basket. If they are giving farmers transport to move their goods to the market, and that will reduce the price of the commodity in the market. These are the things that we expect to see. Like I said, for me, it is for them to vote. We don't know, like I said, they have almost 7 or 9 of them that will be voting today. Whether they vote for a hike or vote for a pause, or but I that they can't start adjusting now. Because if you also adjust now, that's the way also for to put more liquidity in the system, that also might also affect also inflation. I feel that it's a time for us to also look at what is happening actually as people. That will go a long way to help investors to know exactly what is happening in the economy. That's why I said, for me, let's keep our finger crossed and see what is happening. But if you look at the US, like I said earlier, all eyes are also to see the results that come from Microsoft company. The report also to kick off today, Tuesday, the all eyes are there. As this comes between now and 2 weeks, they expect to see more of this high tech company. The one that released before now, they have seen some weak performance, weak performance. They want to see others to see if it will change the trend in that industry. Why also they are looking at also from other sectors to release the result. And don't forget that this artificial intelligence, that this high tech companies in that mature economy are playing, how it's going to contribute to their bottom line. All these are what all eyes are looking at to see in this mature economy. Like I said earlier, Fed meeting is ongoing now. China promised a stimulus to support what? To support the economy recovery. Don't forget that since post COVID-19, no restriction was removed. Recovery has been so slow, and that I think it's become a concern for the second largest economy to also think that yes, to sustain the need to stability, and that also the government are looking at how to come in, because I will tell you that the marine sector and real estate in that domain are under pressure as to speak. And for that, a bailout or stimulus is needed to push it up so that it will support domestic demand, and also that will also bring confidence in that environment. Don't forget that any investment you are doing, you need to look at what is the risk, as far as risk concerned, because it is your hard-earned money. You always want to consider that when it comes to what comes to put your money down for investment. On this note, Africa said it. Africa is missed. When Nigeria was seeing a little recovery this morning again, our market is still standing, looking up gradually. For me, it's a good news for the market. But before we probably go to our live market to see what is happening, I want to look at the two results that were released yesterday after our class. We saw that the Unilever released for me, I call it a missed number, because if you look at the 6 months, the number is looking good for 6 months. But if you look at the 3 months for the from April to June, you can see that there's a slowdown in profit, but on the whole, we are seeing a good result for the 6 months. And don't forget that this manufacturing sector, I will tell you, the policy that is on ground today, the today, does not favor this sector. And what you are seeing is a result of what they've done before. And going to the future is very key, because I tell you, every investment is again the future. If the future is not promising, it's for you to take the right decision right away now. And also, if you look at this number as we go through, to give you an insight to what you should be doing, and also I will explain also to guide what we expect to do. If you look at the number that I managed from Unilever for half year, that is 6 months result. Yes, it look good. I said that the revenue moved from 43.81 billion to 54.21 billion, representing 24% in the green. Fine, that's also what translated to also the same uptrend. Also saw at the top line. Also, we're seeing that the profitability level was also up by almost 44.5% in the green, moving from 1.91 billion to 2.76 billion. For a company that made almost 54 billion, your profit at the end of the quarter or half year is 2.7. You can see that our profit margin will tell us, and that it has an implication for price feeding on earnings. Is the earning going to be enough to support price? We want to look at this at the end of the day. And this 2.76 billion translate to a 48 kobo earning per share against that 3 kobo posted in 2022. And overall, from the 48 kobo posted for half year, almost 6 months, we can easily project or forecast that for the year, let's give this company a 1 naira earning per share. We already see 48. Let's say 1 naira or 1 naira, 10 kobo earning per share. And you don't expect this company to pay you the 1 naira who we expect to have 50 kobo, and that has been what they paid the previous year, or 60 kobo. 60 kobo for a store that is selling for almost 18 naira, 17 naira is money. Does it worth it? And also, if the future of the economy, the way are going that the purchasing power of the people are dropping, how will they also make money to improve their earnings at the end of the day? Like I said, earnings is very, very key. It's the strong fundamental of any company. And don't forget that monetary policy and fiscal policy has a way of affecting company financials, which you can see today that the reforms are favoring some sector, while some sector also are going to we push to corner. But I believe that this also should guide us as investors. And this also, if you look at the profit margin for the 6 months, we're seeing that the profit margin for 2023 was 5.1%, 5.09%, for 2023 compared to 4.36%. Yeah, you can say there's improvement, but see, for a company that having a profit margin of 5.9, I will tell you, is still very, very poor. You can see that high cost of sales, high cost of operation, and also cost of finance has also eaten into this company. That is why we are seeing just a thin or a slim bottom line. And that also we are seeing also a store that is selling for almost 18 naira, posting 46 kobo. For me, we have to think twice in this kind of direction. This consumer goods, despite they have multiple product lines, how can they survive this period? You as a consumer, a worker, how many things are you consuming? Are you buying more as the economy is so challenging now because of high cost of living? These are the things we look at. But there are some essentials that we know that yes, we also there's a substitute for that. The company that has a close substitute of its product that is cheaper is not going to sell on what. That's why it's those companies that have inelastic demand for their product that even when they take price because of the essential of that product, people might be good for that. Is what they have, so they can be able to manage this period. For those that have close substitute that people can drop and go to the cheaper one, they don't mind. Or people are consuming either 4 carton of a thing, it is to what a half or 1.5 carton or 2 carton. It's going to affect also. Even when the company also have reduced their productivity or reduce their output, it's going to also affect because cost also has also increased. And that's why I said this period it will be hard for some it will be hard for some sector. You need to understand. Why I said this is the time to do what value oriented sector rotation, not just rotating. You must look at which sector or which that you should put in your money now. Like I said, that service sector, oil sector, we are seeing some potential, but we need to also see now which sector that you understand the business model of the company. You know the factor behind the numbers you are seeing, the activities, behind the numbers you are seeing. If you understand the company business model, you understand their cycle, also help you to know exactly if after this Q2 number, what will follow what the Q3. Don't forget that most of this company festive period is what they do, and this period there's no festive period, so the consumption is going to remain as high as what we saw, but in festive period of either for the Christians or for the Muslims. You need to understand all this so that it will help you to understand what is happening at the particular time you are also entering the market or taking position in a stock, because we are in the market to make money, not to look at the name of the company, whether it's old or new, or the white man or managed by black or not. Always been that the scorecard will tell you how far the price will go. Yes, good thing is that yes, I said the company has a positive operating cash flow, which is good. You can say that as at June 30th, 2023, the company operating cash flow stood at 150.52 billion against 8 against the 15 point not 5 not 150 15.52 billion against 18.26 billion in 2022. Fine, an improvement in terms of cash flow. That means yes, but we need to see the numbers. I'm saying it's not encouraging for any per share to support the price it's selling. You can't go and borrow and pay your dividend. At the end of the day, if your full year is 110 kobo, you can't pay more than 70 kobo or 80 kobo, and that's also not comparable to the price it's selling today. That's what I mean. Yes, we look at the second one, Triple G. Triple G released the first quarter, knowing that Triple G is a March account, and this number for me is also missed. If you look at Triple G, turnover for the period, it moved from 467.37 million to 666.46 million. That's about 43% up in the green. For PH is a slight decline, and if you look at the margin, or the gap between the gross earnings, and you can see that cost of production is into the cost of sales, cost of admin, and also cost of borrowing is eating into this manufacturing or industrial companies activities. You can see a company that posted 66.46 million for first quarter is putting 2.6 million as profit after tax or profitability level. For me is poor. I can see that also the profit after tax dropped from from 2.39 million to 2.6 million. That's down by 5%. No, for me it's not encouraging. And EPS also stood at 4 kobo against 5 kobo posted in 2022. That same period. And if you also look at this company, yes, it's good that the profit margin, the cash flow is moving from a negative of 40.16 million to 37 point to 379.44 million. For me, yes, but I'll tell you that the price, I know that this Triple J has moved on just on one, no, whether it's more pop or call it, I will not say it's not really movement of volume that pushed that stock Triple J to where it is when it was moving. And this I think we'll be looking at now that we are this kind of economic situation. We need to look at what to support price, which sector is the company operating, what are the policies supporting this company to make what a better return, so that you can say in that kind of stock or that kind of sector and wait for what for good return. If you come back yes to the market now as we speak, it's good that we look at the market, and for us now, we want to see how is the market doing live now in the market. But the market have turned green. So if you look at the chart, I've not gone there. I feel that we're seeing a green position right now in the market again. As to speak, market is doing 65,317.22. The market is up by 48.94 points, which is about 0.1, 0.08 or 9. That's about approximately 0.1 as we speak now, which is good for me. And like I said yesterday, the total bread at this hour cannot be captured from the NSE. But I'll tell you that the stocks that are in the green now, they want the top 5 gainers and the top 5 losers as to speak, and also the top in terms of volume or in terms of activities. As to speak, we can see that corn oil profit taking activities are hit corn oil, and I'm not surprised that people are taking profit expected from where it has moved. Corn oil is leading the gainer chart, loser chart at this hour, 10% down, followed by Multiverse, also 9.9%. You can see Thermos was also 9.9 down. Len Africa, I'm not surprised these stocks and the people are taking profit. You can see also CWG, which is a consumer computer warehouse group. So these are the top 5 losers at this hour. And if you look at the gainers, the flip side, you can see that the FTN Cocoa is leading the pack, followed by Ikeja Hotel and John Holt. You can see Skywave Innovation, or call it a Sako, Skywave Innovation also on that top gainers, and Japan. These are the top 5 gainers in the market at peak. Looking at the volume activity, Japan is coming up powerfully, even in volume. Japan is trading in volume this morning, 54.6 million share traded so far at 1 kobo for Japan, followed by UBA. UBA is also doing 14.90 kobo as we speak now. 29.1 million share traded so far. You can see life of Wapik correlation, Wapik, which is now correlation insurance, also doing 27.9 million share. GT code is also back to doing 22.3 million share at this, and Sterling Bank also 15.7 million share. These are in terms of volume, and also you can see that if you look at this chart, I'll tell you it's dominated by what? By the banking sector. And I said yesterday, because of the high volume and also the history of dividend payment in this sector, position taking, and also the expected impact of assets repricing or revaluation of financial instrument expected to be a plus for the industry, and that also push for that. Those that are likely to pay the dividend, investors are already taking advantage of it, expected that they post a better number at the end of the day. For me, this is how the market. For me, the market has sustained, a positive trend. But I tell you, until market breakout is 6,000 mark, that's where we say market has another all-time high. But the good thing I said in this class on Friday and yesterday is that the more we see the high-profile numbers and the beat expectation, for this market to react, also in that direction. especially liquidity in the market is also coming up powerfully. And the report that were just flying around that the foreign investors are coming back to the market, gradually and all those stuff. I tell you, it's a good news. But I tell you that this their coming back is going to be a distortion to the market, because I tell you, as we plan our market for almost 4 years, from 2020 to almost 2023, before they start coming back, you can see that this market has been stable because of local investor and institutional investor playing this market actively. But with foreign investor coming, I'll tell you, they come in and go out at any time, especially this kind of environment. We have a new government that police have been rolled out. Any police that you know that is anti-policy of what have been made before now, the way they swim the market, you see the market coming down. That is why I said invest on this market should also be active at this point and play the market with knowledge, and don't be greedy, because foreign investors, they are sweet in word and action. They don't wait the time. They set the market reward. The good thing is that we're still having the local investors, having good chunk of the market as we speak now. But I tell you, the more they come, I will especially with another being the value every day. When they come with small dollar, they're going to take over the market from the non-institutional investor, because that also moves prices higher, because there will be too much money chasing few stuff. And at the end of the day, I expect to see that this will put the market worth also in a very high risk, because at any time you're going up and down, but always know where exactly to take your profit. And that's what I want. And I want to stop here and go to the chart for us to look at. Look at the chart, like I tell you that any given time, look at where the chart is going. Like today, we're going to look at, like I normally do, look at what is happening on a smaller time frame. So now I want to look from the bigger time frame to the lower. We'll be starting from 5 minutes. Today I want to let's look at what is happening for a month, for a week, a day, and also we're going to take it down to as well as what 60 minutes, which is 1 hour, to see even as followers going to what 15 minutes, to know exactly what the market is, so that it will help you to plan for either for a medium, for a short time, and also for traders. You understand where the market is going to swing to the next, especially as any season is around the corner. As the more we see high, more inflow of numbers, especially from Thursday this week to what to on Monday being the last, and also as the statutory deadline is drawing closer. I believe as from Thursday we're going to see more numbers hitting the market. This will change the face of the market also, depending on the strength of this number we're expecting. But if you look at, I can tell you the market is still recovering. You can see that the trend is sustained. I've not done any chart, but for looking at the index action alone, you should know where the market is pointing to. You can see it here going there. That's why I want to go to price action now. Before we do that, let's call up our indicators up here. Let's go here. I want to call up the MACD today. Yesterday we look at the polygon bar. Then we will go MACD to see what is happening. Is there a bullish divergence now on the market? We want to know that. Look at where the money flow going. We want to see where the money is flowing to this moment. Also at the same time, look at what our T line. T line is as important for us to have our resistance and support will make easy for us and to see the momentum in the market, how strong it is. That is why we always call our T line up when we are discussing in this class. And I believe that at your own private time, you to always know how to use your T line so that it will help you to know. Looking at the T line here, starting from there, you can see the market is above the T line, which is a good news for us. And also where the market is. And I draw a synthetic triangle yesterday that once market break it out, it confirm. And already this morning, market has broken that line again. So I want to draw it again. The market is already above it. It's saying the market is maintaining an uptrend, which is a good news for the market. And this is what for a day chart. Also, you can see on your chart here, the histogram is also confirming that there's already a bullish divergence here. You can see that the index, the momentum indicator, which is MACD, even though it's a lagging indicator, is also pointing in the same direction with the price, with the index action of the general market. While money flow is also a bit flat this hour, on a day chart. For quick one, like I said, we want to what is the market looking at on a monthly chart to speak. But today is already 25th day of the month. You can see that where the market is now. Market is almost at the point. You can see almost at the equal level where it touched in 2008. You can see where this blue line is going. See where it's touching here. You can see it here, and that's where the market has tested almost 66, which also it tested also in 2008. Once market break that 66,000, that's a new all-time high. So you can see that on the monthly chart, market is very, very strong. You can see the MACD here, looking up. I see that the histogram here is also bullish on the monthly chart. We quickly look at it on a weekly chart because of our time, that we can go to see other stuff before we go. If you look at on a weekly chart, the market is still very, very bullish. You can see yourself here, from the chart. Look at the MACD here, very strong, and also trading above the T line. You can see that T line has become a support level all this while. Anytime you see T line becoming a resistance level, the tell that market is what is trending down, and that's the time of weakness. But anytime you see that above the T line, the tell that the momentum in the market is strong. You can see from here at this point, if you can look at what I've done from this point down here, you can see when it crossed, you can see that the momentum keep up here. But when it came down here, become the resistance level here, you can see momentum was down. Now that we're seeing that it has become a support level also, because the index has crossed above the T line, you can see that the sharp one we are seeing that the acceleration took from here, it turned up, I can see accelerating up, you can see higher and higher. These are the things you need to know when you are trading, because it will go a long way to help you. We have seen the weekly now. Look at the day, you can see the day, and finally look at the 1 hour to tell us what is happening. On the 1 hour chart, you can see that the market is still very strong. On the money flow is reading almost 96, and it's still trading flat on the T line. It has not gone. It's still a support level for the market, even at 1 hour chart. I can see that only MACD has given a sign of slowing down here. The momentum here is slowing down already. Looking at what the histogram at the same time. But finally, 15-minute chart before we go to any other stock in the market. I want you to understand it so that you know that the market is very strong, despite we're spread profit taking, because we have different investment objectives in this market. And for that, don't be carried away when the market goes. Let your goal guide you. Know exactly what you enter for, what's your target, what's it there. You go away whether the person is entering or market is varying offer, it doesn't concern you, because you have meet your target. That is why you have a plan and a goal of playing that market. For me, there's no cause for alarm in the market at this moment. All we don't need that we should also invest with knowledge and don't be carried away with the upside of the market. Yes, let's quickly look at what is happening in the market now. We want to see how far will the corner go in the downward trend. We saw that internal had become flat for all this while, waiting for another trigger, which is this ending that report. Now that they're taking profit in corner, how far will corner go in the southward direction? We quickly look at that. We'll now look at another two stock. Because of our time, then we can call it a day and look forward to see and discuss by tomorrow and see what the market is doing. If you look at corner here now, this 15-minute chart, you can see that already is still look at what's happening here. Flat also on the T on the T line now. But money flow is looking down back from almost 100 to 80. This for 15-minute chart. We want to look at the 1 hour chart, what is happening in the stock. You can see that it's flat now. Yes, money flow is still strong. I can see that you can see for yourself above the T line as to speak. That's why it's still in a range one. Then quickly look at the day chart for the stock. I see that we are going back from from a low, the low time frame to a higher time frame. You can see that looking at the 1 hour a day chart. I see that also you can see that the stock have become bearish, in terms of momentum indicator. But still high, money flow is still high, around 80, which is still about looking down. You can see that I started looking down. Profit taking, I'm not surprised that we're seeing profit taking here. We look at what is it doing on the 15-minute chart. That will help us. I see on the 15-minute chart to see for me, profit taking is ongoing that stuff, which is also not a bad decision. Then quick one, look at what is happening now that we're seeing market come back. Japan good. What is happening in Japan? Is it the time to hold Japan? Let's see what is happening there right away. Can we hold the stock right away? We need to know. For those that are in Japan, it's a local stock, but need to play with caution. But want to see what is happening there to see what investor can gain from that moment. Let's look at 1 hour, a month chart for Japan, because we need to know. If you look at there's a strong resistance level for Japan now on the monthly chart. You can see here, it tested this level almost 150 kobo, and it came down. Right now, it tested it again. Recently it came down. But this is a monthly chart. We want to see how far it goes. On the monthly chart, MACD is very strong. Money flow is around above 50. This is a monthly chart. Then quickly look at the stock on the weekly chart to see where the stock is going on the weekly chart. Quick one. You can see on the weekly chart, you can see that it tested all this sign is sign of weakness, and it came down, and you can see that the next week it pulled back again. But now trying to reverse up again. But in all this, it's staying above the T line. That's thing that you should know. And you can see good volume coming. The sell volume, but now today volume is relatively low at today. But let's see, but MACD is positive and money flow is above what 50 to read what to read the 70 point on a weekly chart. Really go to a day chart to see how the stock look at on a day chart. On a day chart, it has crossed the T line. It was trading for below the T line for a while, on a profit taking activity. You can see here, let me tell you, once you see the stock crossing the time for you to take your profit. After here, when you break out again, you can go. Now we are seeing that the stock trying to make an uptrend now on a daily chart. Looking at your MACD histogram here, you can see that after coming here, I see the acceleration after coming in. After descending here, it's now ascending again. Once it crossed and become here, it's a sign of bullish already. I can tell you, money flow is looking up to reach at 38 and fund is entering gradually, which you can see the sign from this blue line and red line. For me, there's no cause for those that are this stock for short term to watch, but for, I can always say that all these local stocks are very, very risky. So you want to treat them with caution anytime you are trading. On the general note, market is really waiting for what a trigger. More inflow of the market will change the pattern. But today you can see, despite the missed number of Unilever, we are seeing Unilever also looking up in the green. Today, this kind of thing you see when there's liquidity in the market, but don't be carried away with an uptrend or liquidity level in the market. Invest widely because it is hard-earned money. You need to protect that fund and be in good stock. On this note, I say thank you. See you tomorrow. Bye.